Hey everyone, George here. So if you spend, say, $300 on a gift basket to a referral partner, unfortunately the IRS says you can only deduct $25.
And yeah, you heard that right. So in today's episode, I'll break down the rule and more importantly, what to do instead. So you're not wasting money and losing deductions. So without further ado, let's get started. If you're new to the channel, welcome. We talk all things accounting for contractors here. So usually during the holidays, contractors gift realtors, clients, property managers, GCs, vendors. And while gifts can be deductible, the truth of the matter is that you can only deduct up to $25 per recipient per year. So let's go through the rules real quick, and then I'll show you the smarter strategy to go about it. So here's a rule in plain English. You can deduct business gifts, but only up to $25 annually per recipient. That means that if you gift somebody a $100 gift card, you can only deduct $25. If you were to give the same person four $50 gift cards, again, you only get $25 deduction in that case. So the one thing is if your spouse is somewhat involved in the business as well, this can apply to both spouses, so that $25 becomes $50. Obviously, still not a great deal, and that $25 threshold has been in effect since 1962 and has never been adjusted for inflation. So now this begs the question, what should contractors actually do to get around this? So I'm going to lay out 10 strategies or tips to get around this. Number one, stop buying gifts emotionally. Contractors can mess this up because they can buy gifts emotionally. They'll be like, this realtor fed me jobs all year, let me send them a $500 gift basket. That's fine. Just understand that that's a relationship investment, not a tax strategy. So in that case, you're still only going to get the $25, or if you do it with a spouse, $50 deduction. And my tip here is to always, if you're going to go about it directly like this and miss out on the deduction, at least gift people who generate revenue and move the needle, and not people who don't move your business much. So tip number two, and I call this one the $25 club. It's simple, clean, and fully deductible. So if you want clean books, no drama, just keep the gift at $25 per person for the year. So this is perfect for new referral partners, smaller clients, prospects you want to stay in front of. Easy examples are a $25 Home Depot gift card, a $25 Starbucks gift card, Amazon gift card, lunch card. These are fully deductible. And again, for the smaller guys or people you want to stay in front of, this is perfect. Just send them a $25 gift card, no problem. Tip number three, spend bigger, but only in tiers. So if someone makes you bigger money, you can absolutely send bigger gifts, but do it in tiers like a real business. For example, tier one would be $25 and it would include prospects and new relationships. Tier two would be $50 to $150 and would be reliable referral sources and vendors. Tier three would be $200 to $500 and they would be your top five who basically print money for you. The mistake isn't spending $300, it's spending $300 on somebody or a relationship that gives you nothing back. So tip number four is higher volume. So instead of a $200 gift, you spread it out and do 8 $25 gifts. Now you stay top of mind with more people, create more referral sources, and deduct the whole thing properly. And remember, referrals in construction are a volume game. More relationships equal more leads. Tip number five, don't get tripped up by gift basket incidental costs. So remember, the gift limit applies only to the gift itself. Any incidental costs like shipping, packaging, insurance, gift wrapping, that wouldn't be included. So those would all be fully deductible. So any boxing, shipping, cards to make it look fancier, things like that would actually be fully deductible. Just have your bookkeeper code it accordingly. So tip number six, use the husband-wife tax rule. Again, I mentioned this earlier. If you do business with both spouses, the $25 limit could apply per spouse. For example, a husband could be the actual general contractor and the wife could be like an owner, investor, or designer, things like that. Tip number seven, contractor swag beats gift. So here's the thing, a bottle of wine will eventually disappear, but a hoodie, for example, will get worn like 50 times, if not more. So contractors should lean into hats, hoodies, tumblers, lunch bags, flashlights, and tape measures because this actually turns into marketing. There'd be an argument that these are actually marketing promotional items and not gifts, so it wouldn't be subject to that limit. But even if, the IRS argued that and reversed it back as gift, at least from an operational perspective, your swag keeps working for you long after the holidays are over. So that thing keeps reminding people that you exist and getting in front of them continually. So tip number 8, build a system and not gift randomly. So most contractors I've dealt with gift randomly, but that's not what you want to do. You want to build a system around it. So make a list of top 10 referral partners, top 10 repeat clients, and top 5 vendor relationships. And the standard on this is each quarter you do one quick touch point. A $25 gift, a lunch, a handwritten note, and that's how you build a predictable workflow and lead system. So tip number 9, this is actually a requirement for gifts by the IRS. So just so you know, to claim the deduction, you need to track cost, date, description, purpose, and relationship. So this is more of a bookkeeping thing. As long as your general ledger system, and pretty much all of them I know include this out there, includes the date, some sort of a description, the amount, and as long as they have an audit that this was a gift, you just say, this is a realtor referral. So really the tip here is make sure your books are all straight, they're proper, you have some decent bookkeeping going. I mean, that's just a sanity check for your end as well. You always want a good set of books so you don't miss deductions, so you don't miss income and say not report 25% of gross income and open 6 years of statutes. Like always pay that a couple $100 a month and have a good set of books on hand. Tip number 10, don't code gifts as meals. In the event of an audit, this could be a problem. So again, clean books is what you want to get at. So those were my tips, 10 tips on how to get better bang for your buck on your gifts, to either double deduction or make it fully deductible if it's potentially marketing promotional, or just get, even if you're not able to deduct the whole thing, just get a much better ROI on it. So I hope you found this helpful. If any of this applies to you, if you have any questions, our booking link is down in the show notes, and see you in the next.